Welcome to the weekly crypto check-in, your go-to podcast for navigating the world of cryptocurrencies, hosted by Robert Swarthout and Andres Sandate. Today, recorded on October 22nd, we're diving into the latest crypto market shifts, blockchain breakthroughs, and expert insights to keep you ahead of the curve. How's it going, Andres?
Good, Robert. Happy Wednesday here in Atlanta. I was just telling you before we jumped on, I haven't had the chance to get outside, but we've had some marvelous weather the last week. I feel like we're sort of like closet weathermen. We talk about the weather because that's how boring we are. But lots going on in crypto. So I'm excited about the show. And you might be asking yourself, why is he wearing that Hurricanes hat? They choked last week. And I said, well, I've got confidence. We're going to be fine. Everybody's going to stub their toe in a college football season. So
that's college football's been wild this year.
It has been.
I'm a Florida fan, so this is I was excited about Sunday when our coach got fired. I was ready for a change. So
yeah. I told you this before, these headlines, there's some massive headlines. I'm like, is Robert getting into his angling on the media side, because he's putting trillions now in the headlines, is trying to add more viewers. But the first one, 300 trillion PYUSD, right? PayPal.
So we'll, I guess, preface this by saying it has since been reversed. So nothing crazy, more of an error that happened here. But Paxos and PayPal are the combination here. Paxos is the issuer of PayPal's stablecoin PYUSD. And they inadvertently, is my understanding, issued $300 trillion in PYUSD. To put this in perspective, it is 125 times more than the USD in circulation around the world. So just a small oops.
Small oops. That didn't have anything to do with the Amazon outage earlier this week, did it?
No, this predated that.
Okay.
Yeah. So the Amazon outage everyone notices. This no one really noticed, but the crypto people that were guys watching the news. But this kind of crazy. It just shows how crypto is not infallible, obviously, and just that you can you do have risk with counterparty. Obviously, I think they corrected it so quickly it didn't really affect anybody.
20 minutes I saw.
Yeah. So it wasn't terribly long. I guarantee you, they hit enter on the keyboard to create it, and somebody noticed what they did. Then they were trying to figure out, how do we unwind this? And it took them 22 minutes to figure it out. Is how that went.
Yeah, I mean, it's a red flag oversight, right? And I think it probably, for skeptics of this whole space, is just another example of there's a lack of internal controls and there's no financial oversight. And who's running this whole thing? Is it some guy? I always say some guy in his boxers. I don't know why, but it's you see you see these headlines, and I'm sure the traditionalists, the TradFis and the regulators out there are like, yep, see, we need more adults in the room. But glad that nobody was hurt.
Ironically, this is probably the adults in the room doing this one, though. I can't imagine Paxos is done by a bunch of teenagers or anything like that. So, anyways, more of an entertaining headline than anything else. Obviously, I don't think anyone got harmed by this. So, but we can move on here. This next one is about acquisition. So Ripple, the company, obviously not XRP, but Ripple, the company here, is on a tear this year with acquisitions. They this is the third one this year. This is I believe the second one that's at least $1 billion. This one is right at $1 billion. And kind of cool to kind of see them add another leg to the stool, you might say, for a business line for them.
Yeah, I mean, the corporate treasury market is massive, and my understanding, is this puts them square in the marketplace for serving corporate treasuries, publicly traded companies and non-public companies,
banks,
banks, everything from liquidity, risk management, exchanges, the exchange risk. So there's so much that comes in. It's just this another really, really important, I think, sign for not just for Ripple, but also for the industry of this combination of traditional and digital coming together.
Yeah, it's it functionally, G Treasury, to be clear, sells software to whether it's banks, corporations, Fortune 500s. I remember looking up kind of like a list of who their customers were because I was curious. I'd never heard of G Treasury, American Airlines is an example of a Fortune 500 that uses them, all the way down to 13,000 banks around the country. So my guess is those are probably more credit union type style banks. But a big deal, because if you think about it, like, I'm sure Ripple would love to be in this market, but in their old model, a way of thinking, potentially they would have to go and send their salespeople out and sell the software into 13,000 banks. This with a single acquisition, you basically all of a sudden get it all. Obviously, they have to convince them to use it, but it is still a big deal. I actually think this one flew underneath the radar more than the importance will be long term, my guess.
Well, and you look at the headlines, beneath the headlines, and the scope of the customer base is pretty impressive, right? I mean, 1,000+ clients across 160 countries,
right? And
the ability, to roll out new products, that Ripple is in a position to roll out. As one takeaway said, it's going to come down to how they execute, and is this a slow rollout? Is it an aggressive rollout? Just covering all those customers in all those countries, is pretty fascinating for a company like Ripple,
a private company at that, right? I mean, like
at 1,000 people, right?
Yeah, 1,000 people due to largely acquisitions, and one thing that they did differently with this announcement than I've seen with a couple of the other prior announcements for acquisitions was that, in the past, say Hidden Road, that was 1.25 billion. They announced it, and they also said, this is how we intend to also put the XRP ledger and crypto into how we had this mixed together. Okay, move forward to G Treasury, and they said, hey, we bought them, but it doesn't really say what we're doing with it. So, like, I think there's more to figure out there. I think this one will move slower than you may see with other acquisitions. So I don't know. That could surprise us, but this one was handled a little bit differently.
Yeah, for sure. My sense is the folks at Ripple have a lot more in the pipeline. It seems like they're really making a play like Coinbase has, of building critical infrastructure underneath what likely will be a pretty regulated entity over time, to not just play in one segment of the financial markets, but to be a key cog in the wheel for many aspects of our daily and kind of corporate financial lives.
Yeah, it's interesting, your comment there. There'll be more regulation. Obviously, that will be the case eventually. Do you think there's any sort of like rush by these companies making these acquisitions, whether it's Ripple or Coinbase or the like, to do these before there's more regulation because it may be harder to do them later? Or do you think it's just purely like they're just doing a lot because it's...
No, I think there's probably some of that too, is like the ability to establish where you want to participate and compete before more rules come into play. Because you'd have to think that with a lot of these acquisitions, I mean, right now with President Trump, it seems like there's a more pro M&A environment, because the FTC was, a real challenge for M&A activity, among others, right, under the Biden administration. And now there's a more pro, let's call it, pro M&A environment. You'd have to think that that's part of the calculus here, especially also that I think a lot of these boards and these leadership teams are recognizing now is the time to play the hand, if you will, and decide what businesses you want to compete in. Some of these M&A deals may not work out, but play the hand, try to build your, the different verticals you want to be in. And then you end up being an even more compelling public company, more diversified customer base, revenue base, earnings base, but you also are that much more attractive to a bigger acquirer at some point in time, because you've done a lot of the consolidating at the lower level.
Absolutely. And it could be that there may be, some of these more traditional, larger, call it JP Morgan type figures out there. Maybe they would want to be more, heavy on the acquisitions right now, but there may be so much regulation they already feel, right, from what they have to deal with. So like maybe this is allowing the the new incumbents that aren't burdened by that to potentially have a little bit of, I wouldn't say head start, but a little more freedom. So I guess we'll find out here over the next 6 months. It'll probably be pretty telling. So we'll move on to our next topic, number 3. And really 3, 4, and 5 we're going to bundle all together and talk about at the same time, because this is different angles on the same thing. A week ago Friday, crypto had its largest liquidation event in history. This made FTX look small. This made everything else look small. And it, crypto has its liquidations. I'm not necessarily complaining about that. The part that I'm going to complain about here a little bit is, while it's not illegal currently, there absolutely was likely some insider trading going on here. 30 minutes before President Trump on that Friday, I believe it was a Thursday, Friday, tweeted that he was thinking about raising the tariffs on China to 100%. A Bitcoin wallet was opened. It was funded with $4 or $5 million. They went and got leverage at a DeFi exchange to basically get a $200 million position. And then Trump's tweet happens, or Truth Social post, whatever it may be. And then the market sold off heavily, very quickly. The liquidations are staggering. It potentially could be 20x larger than anything else that we had seen, like magnitude larger. And then right about the time that it felt like it would be a bottom, that short was closed. Like it is hard to time something, but to time a top and a bottom within an hour candle or a couple hour candle is pretty bonkers.
Yeah, I mean, if there was a public square where the long-term oriented market participants in crypto and digital assets could burn somebody in effigy, you would think whoever is behind this is, I'm not advocating for that to happen, but I'm just saying these are the kinds of things that really just put a stain on, all the good things that are happening in the space. Somebody manipulated information, took advantage of it. It appears we have no name, we have no party, we have no entity, we have no evidence of who it is. So my only comment is you hope that with regulation and with more rules and a framework in place for how all participants are gonna have to abide by some level of rules. That doesn't mean it's going to be perfect. That doesn't mean that there still isn't manipulation of our markets today, but trust in our markets and confidence in our markets is super, super critical for their health and function. And so when this type of stuff happens, it's just a bad look. It's a bad eye, and it's unfortunate.
Yeah, it's and again, we'll emphasize, because we don't have regulation, what happened was not illegal.
Right.
We are hopefully not too far away from that being illegal. Not to say that it won't happen, but maybe there could be repercussions, and maybe some of it will be some people may be deterred. So I don't know. It's I didn't realize the whole inside piece of this until after the fact, as I was reading through kind of the news items. But, to kind of put some numbers around this, there's some estimation that there was $400 billion in liquidations in that hour-ish period. That is a vicious sell-off. And I guess tying it all together as more of something just kind of laugh about, Bitcoin also had its first $20,000 candle on the hourly chart. People would have guessed, if you would have asked them prior to this, when Bitcoin has a $20,000 candle, is it up or down? 95% of people would be saying it's up, right?
Yeah.
It ended up being to the downside. So it finished roughly in the middle of that. So it kind of pulled back roughly 10,000. So it went from, call it 123 or 122,000 all the way down to 102 and change. So
I saw it bouncing around this week at 102, 104, somewhere in there. I mean, it's not a surprise to you or I, because we follow the space, but how many folks are, when they think about this whole space, the crypto space, it's still Bitcoin only. And I feel like a old, tired, telling old horse war stories, type of thing when I say this, but we have come a long way as an industry, and you can see that in these headlines and hopefully in things that we're covering. But in another sense, I still feel like it's super early days.
Oh, I mean, right. I mean, I've used this analogy for years, but it still feels to be true. Is we are like singing the tail end of a national anthem at the baseball game. Like first pitch hasn't been thrown, but maybe we're kind of right around that period, kind of floating in there. But super early, absolutely. So.
Yeah. Well, and the thing is, we can also say that we've seen an evolution in the markets. Just to put a bow on this, these headlines. If we would have had a $20,000 down tick or candle move in Bitcoin 5 years ago,
right?
People would have probably thought the whole space is going to collapse. It's going to zero. Now we can actually have it as a headline, and we can see that the whole space can absorb this, and BTC Bitcoin can absorb this. Yes, people lost a lot of money. Yes, there's manipulation, but the space and the industry is in a much, I would say, healthier place,
right?
Today than it was 5 years ago. And I would argue it'll hopefully be in a healthier place in 5 years, so that we're not hanging on every thread about what happens with Bitcoin. But to me, it goes back to the comment I said. It's just so many folks tie the whole industry up in one, effectively one asset,
Right.
when it's obviously there's a lot more going on.
100%. And even if you're to adjust for on a percentage basis, right? This was like a 15 or 18% move.
Yeah.
If we went back to an FTX happened, there wasn't 18% moves in an hour. And you're right.
Yeah.
Back then, it would have been people felt that zero number coming a lot quicker than they would have felt it a week ago. So, anyways, we'll move on here. Our next topic is the crypto banking race is heating up, and this one came out of left field for me. So I know that there's been some applications sitting out there for the OCC to potentially charter some banks. I know that like Circle's looking at it, Ripple's looking at it. But a notable precedent was set this last week. The OCC granted conditional approval for national bank charter to Erebor. It's an Ohio-based crypto-friendly bank. Again, this is potentially a little bit of political favor here, but so Palmer Luckey, Joe Losedale, and Peter Thiel are the backers behind that. So kind of cool to see this happening.
Yeah. So Palmer Luckey shot to, I guess, more fame. I think a lot of people in tech circles in Silicon Valley and amongst the tech elite would be more familiar with Peter Thiel, and be more familiar with you said Joe Lonsdale.
Yes.
Yeah. Then Palmer Luckey, but Palmer Luckey is the one that you could pick out of a crowd.
Correct.
Yes. You just have to trust me, and you have to go out and search for it. But here's the question. He got well known for a couple of different tech investments and for a couple of different things. Isn't he one of the folks that's behind some of the stuff that's going on in defense and tech that's working with the U.S. government?
Correct. Yes. So he founded Oculus, which Facebook bought.
Yeah, Facebook bought it, right? That was one of his startups.
And then, then he took basically the funding that he got from that, for all intents and purposes. And now he's doing a bunch of stuff with the Defense Department, defense industry.
Right.
Yes, with trying to use AI and apply a technology lens to it. Yeah, it's pretty cool what he's doing.
Yeah. So he's a known quantity in DC, like you said, with the size of our U.S. Defense budget and just a lot of the stuff you're reading about with drones and AI and let's call it modern defense, modern warfare. So, but those are three big names, right? I think a lot of people have heard of the other two.
Sure.
The third one, people in tech and people in the space would be like, okay, you're putting together like an A-list team here of tech folks. So they got conditional federal approval, which means, they're forming a new bank. And, there hasn't been as much bank formation in the last 5 years as there was,
really since the financial crisis.
10 years ago, right? 20 years ago. Georgia was one of the leading places for de novo bank charters and approvals, and we had a lot of collapses. Question for you is they want to become a regulated deposit,
full service depository
gathering institution. Do you think they're aiming to be more like a SoFi or more like a traditional, I mean, I'm not say brick and mortar, but more of a traditional bank that offers, that has, let's say,
Well,
a retail presence.
yeah, I mean, I'm just going to be able to kind of pull from what I can see that's been put out there publicly, but like they do also have a pending application with the FDIC so they can protect customer deposits. So to me, that says they would be more of a traditional bank, but maybe with a crypto first mentality, would be my guess. Is the way that I've made sum that up in a couple sentences.
Interesting. Yeah.
Yeah. I mean, who knows? We may actually find out pretty soon. But it's, there was players in this space prior to, the choke point 2.0 that we talked about a lot. Well,
yeah, the regional banking collapse. I mean, that ate up 2 or 3,
right,
institutions that were pretty focused on tech and crypto.
That would have been probably 1, 2, and 3 in the space market share wise. They are gone. That's Silvergate, Signature, and SVB. So it's kind of a greenfield again. Oddly enough, you don't see that happen very much in industries to have players there get wiped out and kind of get to start again. So,
but we also are seeing banks or financial institutions that had pulled back on crypto come back, and we know that firsthand because
100%.
one of the institutions that had said we're just not in crypto banking business anymore came back and said we're back in crypto banking business and
right.
we'd love to talk to you. So
yeah,
this whole thing has morphed, obviously, under the new administration with new sheriff in town, if you will, at the SEC and at Treasury and the OCC. Like this whole regime change, if you will, has led to banks and financial institutions recognizing like maybe we just didn't have crypto high enough on the agenda, and now some of them are moving back into the space aggressively.
Yeah, and I think that part of it is they didn't want to be caught up in anything to do with the SEC. I mean, it didn't make sense. There wasn't enough business to be made there, profits to justify the risk. Totally fair, because that definitely was a government orchestrated shakedown of the industry. So,
well, and Ripple Labs and Circle Internet Financial are also applying for banking charters,
Coinbase,
to be national trust funds.
Yeah, I mean, there's some names out there. There's, I think, 5 or 6 decent sized applications sitting out there. So,
well, and part of it is that the FDIC used to have this like process that you had to go through, is my understanding, to be, to be a bank. And if you were doing crypto in that letter, right, it kind of killed your chances to get apply. What's the name of the woman who's been trying to have a banking license approved in Wyoming? Caitlin Clark, or not Caitlin Clark, Caitlin Long.
Caitlin Long, yes, with
Caitlin Clark is known for something else called hoops. But Caitlin Long has been going, for a number of years.
Digital, but that was 2021, and it was a state charter, I believe.
In Wyoming.
It's she's in the middle of they are in the middle of a lawsuit against the Fed, and I've often wondered if that's going to become a liability for them effectively, and like they're going to get passed up in the line because they have an application sitting out there, and it was denied, but I guarantee they've reissued it at this point.
Right. But it looks like some of the headwinds have eased around banks, and one of the things that it's opened up is that FDIC has removed this pre-approval required quote unquote letter that did slow bank involvement in crypto. So seems like there's a revisiting of sorts happening at the FDIC.
Yep. Well, I'm sure we will know a lot by the end of the year on a lot of these, if they're already kind of conditionally approving this one. So,
well, I kind of go back to one of the headlines you brought up a month ago or so, when a couple of banks, maybe it was Ripple and others, applied for banking charters, and the American Bankers Association, or one of the lobbying groups that supports the bank lobbies for the 7,000 or whatever community and regional banks, basically objected. And it makes me wonder what the incumbent, even fintechs, right, but banks for sure, like what's going to be their game plan?
I mean, the one for the Stripe's application will be the one, I guess, the most unobvious one to watch, right? I mean, because the other ones obviously are in crypto. Stripe probably has ambitions to be in crypto because they have done a little bit of stuff on the side, but nothing, I would say, in a major way. So our next topic here is Citi, the traditional bank, is set to launch crypto custody in 2026. There's not tons to talk about here, just beyond another big bank going to do crypto custody. It almost is to the point where it's not even worth talking about these on the podcast, which is kind of cool. That shows progress. But we will be able to hopefully learn more. And I always see these headlines. I'm like, what are they going to custody? Is it just Bitcoin and Ethereum, or are they actually going to have a suite of options? So I'll have to find out.
Yeah, the big banks, the individuals who run those banks, the people in compliance and technology and, regulatory affairs, not to mention the C. I mean, they all know each other.
Yep.
And so it's almost like they move first, but Wells Fargo and JP Morgan and Bank of America, they're all paying attention. They all have a game plan, and it's not like all those other firms couldn't move in. JP Morgan came out, I guess, in comment and said, they're not moving in to do crypto custody. But you have to think, depending on what happens with the Genius Act and the legislation, like all this stuff is subject to change once that bill is finalized. Hopefully it gets finalized before the next midterms. I was hoping by the end of this year, but
not the Genius Act, the Clarity Act. But yes,
the Clarity Act. The Clarity Act. We'll hopefully see something and some progress before the end of this year, because I think the question is if it floats into the middle of next year, that could be a challenge.
Yeah, it's not on our list here, but I was reading today, and I guess we can talk about it quickly. Is there was somebody saying how they felt like the bill had stalled. Obviously, Congress has got to get its act together around this whole government shutdown, but assume that gets taken care of. They felt like the Clarity Act had stalled. And one of the goals, there was a meeting today happening. Actually, I think it's happening still right now up in DC. The president's crypto czar and Democrats and Republicans had gotten together, and they were hoping to reignite bipartisan talk to get the bill to President Trump's desk before the midterms take priority. So I don't know when that kicks into gear. My guess is summer next year is when they kick into gear. So I would love to have it sooner than that. But we're admittedly not, but maybe 9 months from that, 8 months from that. So it could happen pretty quickly. So
yeah.
Anyways, well, we can move on to our second to last topic. Is the DTCC confirms that, and their head of cryptos who said this, confirms that $100 trillion of assets is coming to the blockchain. They didn't give a date. They didn't say which blockchain. There was a bunch of ambiguity here, but this is going to be the moment, I think, where it's going to feel like nothing's happened in crypto, and then all of a sudden you wake up the next day and it looks like everything is tokenized. It's going to be because of this, because they are basically the agency of record for all the stocks and bonds and who owns what and all that kind of stuff. They are the one in the United States, and pretty cool. And when we're talking about trillions here, not like the 300 trillion at the top of the show, the 100 trillion at the bottom of the show is a real number. So.
Yeah, I mean, and there's some, I guess, question out there that this statement of 100 trillion is coming to crypto. As you dig in, crypto's full of conspiracy theories and
yes,
innuendos and understanding kind of what is the implication and interpretation of 100 trillion. What it means, does it not? That, and this goes back to sort of the advisor in me, an investor in me, is like, we're talking about assets out there today, like ETFs, stocks, bonds,
all the things
that those could be
represented on the block,
under custody in crypto,
yes,
or tokenized on the DTCC. That's not assets that are on-chain crypto on the platform.
Correct. So we'll just kind of boil it down even further. It's not, they're not saying, say that they had said they were going to tokenize this all on Ethereum. We're not saying that $100 trillion is going to flow into Ethereum.
Yeah.
Just to be clear. It would be a digital representation. Kind of think of it as a database record saying that, Andres owns some Apple stock. That's what they're referring to here. But this opens the door to 24/7 trading, 365, instant settlement, all the fun things that we've been waiting for that tokenization can bring along. So,
yeah, I think we just need to get a press release out from the DTCC clarifying what what exactly they mean, and more importantly, like what's the roadmap
Yeah, or
for
timeline, right?
settlement and for tokenization,
Yep.
and put some figures around that, because obviously there's probably a lot of pilot projects happening, and there's a lot of development that's got to happen around regulation, in terms of not only securities but real world assets, like real estate and infrastructure and other things that we would love to see tokenized. But again, the financial industry heavily reliant on some core systems. DTCC is one of them, right?
Yep.
Moving money around the world through through the Swift system, another one, right? A stuff that it doesn't make headlines, but it's almost like the Amazon outage this week made some companies vulnerable that do online commerce, right?
Yep.
Without these infrastructure components, DTCC, Swift, etc., like money doesn't move.
Correct.
So the question is, what does that roadmap look like? How long is it going to take, etc.? Fascinating to see these figures thrown out, because it's out there and it's coming.
Absolutely. Well, our last topic, and this should be a quick one, T. Rowe Price. So yeah, I guess everyone probably recognizes that name, largely mutual funds, but they have filed to have an actively traded crypto ETF versus just a spot or an index. This is the first, I would say, more exotic product of sorts that they hope to come. They gave no details on what would be underneath the hood, but Eric Balakunas at Bloomberg brought this up, and I saw it on my Twitter feed. But he's like, "There's about to be a land rush," and I can only imagine the combination of these things. It's gonna be hard to keep up with all of them.
Yeah, you're absolutely right, because there's been so much activity from the traditional asset managers. T. Rowe, one of them, doing what they can do in alternatives to partner up to realize, what they have is distribution. They have brands, but they didn't have in-house expertise. You have to think the same thing if crypto becomes available at retail through your brokerage account, through your bank, as we've talked about today.
Yep.
They're going to want to sell you crypto funds online on your, through your brokerage account online, etc. So you've got to have the capabilities to offer not just passive, not just multi-asset, but now, people want active. So it's coming. It's coming.
Absolutely. Well, that's a wrap for this episode of the Weekly Crypto Check-In, recorded on October the 22nd, 2025. Keep up with the latest crypto insights by searching Teton Crypto Capital or the Weekly Crypto Check-In on your favorite podcast platform. Leave us a review to share your thoughts, or like Teton Crypto Capital's LinkedIn page for more updates. Until next time, take care.
The information presented in this podcast is for educational, informational, and entertainment purposes only and does not constitute financial, investment, trading, or any other advice. The content provided is general in nature and not tailored to any individual's specific circumstances. Always conduct your own due diligence and consult with a professional financial advisor before making any investment decisions. Cryptocurrency trading involves significant risks, including, but not limited to, the potential for loss of all or a portion of your investment, market volatility, and regulatory uncertainty. The hosts, guests, and producers of this podcast are not responsible for any decisions or actions taken based on the information discussed herein. Cryptocurrency is not legal tender in many jurisdictions and is subject to market risks. Past performance does not guarantee future results. This podcast does not endorse or guarantee any investment outcomes or results. Use of this podcast implies your acceptance of this disclaimer.